Hi, this is Liqian Ren, Director of Modern Alpha Wisdom Tree ETFs. Welcome to China of Tomorrow podcast series, where we navigate China, India, Japan, and the broader emerging markets with members of Wisdom Tree and other industry leaders. Liqian again, April 29th, 2024. Today I'm just going to give a quick commentary on China. I think the overall situation is that the sentiment on China has improved, while at the same time the economy is still weak, but it's not collapsing as some of the more negative sentiment that was when China equity have quite some volatility a couple months ago. So I think I'll first talk about the economy and then also talk about a few headlines that has made the sentiment a little bit better. I think the economy, one of the two things that was positive was China's GDP officially is 5.3%. Keep in mind, actually, the deflator is about 1.3%. So the nominal China's GDP is actually closer to 4%. That is probably one of the reasons the local profitability sentiment is still weak, because it's harder to make money in a deflationary environment, which is really the situation is very different from the US side, where the inflation is running a little bit hotter than expected. And then secondly, the China's exports was, it was decreasing, but not as bad as many people was kind of saying. So even though there are huge negative winds on protectionism, or you can say it in any other ways, that because China is exporting a lot of electric vehicles and other higher value goods, and there will be more measures in US, Europe, and maybe even in Japan, I think, to kind of slow down the imports into these markets where their own domestic companies are likely getting more competitive with Chinese companies. On the other hand, if you look at China's electric vehicle companies, the profit margin is thin. So I think that this baseline, we are going to live with it a little bit, that when Chinese companies get into an area, usually they're very competitive. The technology is not as value added as much as some of the earlier technologies. So it's easier to compete, and when it's easier to compete, the profit gets competed away a little bit more in China. And also China's state-owned sectors are difficult for private companies to get into, which makes the non-state-owned economy also more competitive. So I think that is going to be a baseline for a while for people outside China and in China as well. I think the economy, the housing market continue to kind of slow down. There are companies that they're trying to lower prices, but the government also have like kind of rules in place, like not allowing the price to go down as much. But you can see in transactions, it's not very high, and housing continue to be a drag. I do see there are several cities now removing limits on buying houses, like Chengdu, which is quite a big city, and I expect many of the Chinese cities to follow. I think the really interesting political question is why Chinese cities was so slow in getting rid of these restrictions to buy. You would think that they would have gotten rid of them much earlier. I have my guesses. I think you really need to understand this from China's political economy than a pure it's more politics than pure economics. So in terms of why sentiment has turned, I think there are really a couple reasons. One is US-China relationship. It's it's really one of the biggest factor. Secretary Yellen and Secretary Blinken has both visited China, and in the last one day, I think Tesla founder and CEO Elon Musk also visited China and got into a meeting with Prime Minister and got on China's evening news, which is usually the a PR kind of exposure for anybody or any company wants to be on Chinese news. The 7 o'clock evening CCTV news is usually the hardest to get, and Elon Musk was on there. I think their self-driving because of the data security issue, China was not, they were not available in China. It's increasingly seen that they will be getting available in China. So on that front, the sentiment definitely, at least from ordinary people's point of view, it seems to slightly better. And last but least, there will be vendors coming to the US. I know people make jokes of it. I make joke of it too. There will be a 10-year lease. And even though I've always said I don't think in the near 5 year, the war in Taiwan risk is very low. But I think I really think that on these, a lot of US-China basic relationship, we don't really see improvement. It's a short-term kind of because US has other things need to take care, so it kind of softened a little bit. Another headline that has made the sentiment in China quite better is actual money, right? Chinese government has put their own money in popping up equity when the equity risk was very high a couple months ago. So they do have significant cash that on the side they could put in. So that definitely has given people better sentiment. And the third is China has fired the CSRC, which is the equivalent of SEC head, and the new head has started many measures like forcing Chinese companies to pay more dividends. And so a lot of these things on the side of slightly better economic data kind of have this compound effect on making the sentiment better. Maybe one of the last is China now indeed is starting to be opening up more Chinese mainlanders traveling to Taiwan. I think a while ago, either side were very much on, we don't want to do this unilaterally, but I think the mainland side now probably has a slight change of mind, says that we can, even if the Taiwanese side are not necessarily going to match it, but the mainland side are going to make traveling much easier between mainland and Taiwan, which was I've mentioned on Twitter that I expect this to happen from the ex Taiwanese President Ma Ying-jeou's visit to mainland and meeting with President Xi. So I think a lot of headlines, generally the headlines has made the sentiment much more positive, and while at the same time the economy is still quite weak. So I think that's a general baseline here, and we like to hear from you in terms of what topics you want us to go deeper, and we can drill down on the specific topics. And you feel free to leave us comments on Twitter as well. I'm on Twitter, and we want to hear from you in terms of the kinds of topics that could help us understand better between US and China. I really think it's the number one and probably going to be the number one geopolitics thing for us in probably in my lifetime in the next 20 years. So it's always interesting that sometimes the sentiment gets better and sometimes it's much more worse. Thank you. Look forward to talk in 2 weeks.